Hi there, everyone. Welcome to another Traders Community Podcast. It is the eve before quad witching, and it is St. Patrick's Day. So, for all those with a tinge of Irish in them, have a good one. And let's get started, shall we? So, the bull market that we have been watching since Tuesday? If you recall, on Monday we had all the soothsayers out there saying the death cross on the Nasdaq, death star cross at the end of the world. Clearly what happened was the market got short on that, and we've rallied up 3 hard days, basically in a quad witching, and we came right up to that level target we had set on Tuesday as a possibility on testing the downtrend on the S&P, etc. So let's move on from that. And just a reminder that we're not here for financial advice. So please make your own decision. Just a couple of old seasons traders trying to share our insight of what we see and what market makers and similar positioning is going on, which is affecting the markets. The idea is to have you not sell the bottom or buy the top and not be in fear. So here we are. We have the glorious Madavi, who has pretty well called this bull run from Tuesday, and Meta Johnny, who's been trading up a storm also. So welcome. Let's start off. So 3 days of bulls on the S&P. I think that's the first time in, I want to say I read 2020, but that sounds a long time ago. So anyway, let's get into it without further ado. So right now we're trading at oil back over, well over 100 at 103.60. S&P 43.92 in cash, or the Russell 20.55. Nasdaq's planned at over 14,000 at 14.54. We saw, and remember, this is always a good thing to watch. We saw the VIX slide away and right to that 50 on the daily, which has been its steady point. It does flick either side of it. And we got up to 36s, plus 3/8 there. As far as natural gas then, it had a strong run to $5 today on its EIA report. So let's first take a look at the SPOOs. It's been pretty well straightforward. We've just basically traded it from the long side. And if you recall, as far as protection goes, with VIX going down, we bought some puts against that and Apple to protect it in case it does happen and you miss it. And you can see it broke over that daily and came to that top over here, almost at the 50. And on the weekly, right to that target. Remember, the 50 moving average on the weekly basis, and the tanker. So you can see very heavy resistance here. But these things act like a magnet. And so when we always say beware of particularly those that don't trade and from another view, and it's not their money, etc. And that's where things like this death cross, they made all these big pronouncements. And lo and behold, look what happened, right? So, and we're still seeing a flow on from buy the rumor, sell the fact on the interest rates. A lot of people are saying, well, that's the end of it. They're going to raise rates. Well, we've gone up since. But there is obviously a lot of fundamental bears out there, but we're climbing the wall of worry, and it is into big optionality. Okay, so let's bring on the Nasdaq, which is Madavi's domain. So here's the hourly. So you can see what's going on there. Basically a mirror image of the S&P, but with a little bit more volatility. So there we go.
Yeah, with it today, just collect profits. The moves are not like most of the time in the S&Ps we've been watching. We run and we usually head one direction and we keep going. Lately, we go up to a certain level, then we take on speed and fall back again and then and you don't know if this is it at the top if they're running up, but then tend to slowly creep back up and have dramatic moves, which could put you in a popcorn machine. And so you got to watch you're not over trading and where you're at in the markets, and take profits. Don't let your winners turn into losers. I did that a couple times, and it starts hurting after a while.
Yeah, so that's true. There's I tend to be more a directional trader, so kind of one way, and the only shorts I'll do off or longs is when it's against the trend is where it's right in the turnaround point, because you want to be getting. I'm more a fan of getting the dip and getting the rally, and so's Madavi, rather than buying and selling breakups. Because when they're wrong, you can lose quite a bit. And you can see that that's why we use Murray and all that. But you can see these kind of moves. Like the big move yesterday was that move after Powell, and then we went back up when he basically said, "Oh, everything's going to be all right." I just find it amazing. The Powell and the Fed are blamed everywhere for everything, yet everyone goes to them as their divine wisdom. I mean, you can't have it both ways, right? So on the daily basis, you can see Nasdaq 2's got its head above the Cajun. Now, what it tends to do is spit these. It's not as clinical as the S&P, and that's a lot to do with the volatility. So we have that in play. And so let's move on to the Russell real quickly. So the Russell showed strength today because remember what we said, how we play the dribblers. So you sell them until basically it gets into continuation, and you know pretty well that dribbler, because of the nature of the beast, is they buy the same thing, but usually after being hurt a few times, they need to rally first. So a good example is Fubu, which unfortunately we had as a swing play for fundamental that it hit our stop, we got out, and it's obviously higher now. But as a general rule, you can then buy them the next morning. And pretty well our dribbler dirty dozen, that's the same pattern. It's the same pattern of thing. And until that stops happening, you know you're still in a bear phase. Because what usually happens is they move into different plays rather than constantly chasing the dragon. And that's kind of what's going on, right? So the Russell reflects a lot of that. And so look how extended that got today. Minus 1/8 to 8/8. And the puts are pretty cheap in that, which is telling you that as well. Okay, let's move on to bonds real quick. You can see bonds sold off all day. Remember, lower bonds means higher interest rates. This is daily. And you can see what's going on, right? We're not as low as yesterday, but we're still bright red. And if we looked at an hour, so this is the Fed yesterday. Whoops. Where is the edge of that? Let me just find that. There it is. So if you look at this, so here's yesterday, the Fed, and you can see that was the reaction, profit taking, whatever, and we've come down from that. Okay. As far as crypto goes, any thoughts here, Johnny? It's just doing the same thing, moving with Nasdaq, but losing its fervent fever. Remember, late up until a few weeks ago, this would just be a mirror image of Nasdaq, but I see today it's not doing that. And commodities, let's go on to gold, of course. So gold, remember yesterday, it came down and corrected that Cajun and bounced hard through there, right? Bounced hard through there, so it's a bullish sign there. If it gets legs, it's just got to hold this, then this becomes an ABC, and we have the energy to go back and test that high. Copper's the other one we looked at. Remember, it was banging between the Cajun and Tenkan, and lo and behold, just like gold closed above it. Do you see the pattern? Oil up, copper up, gold up. Wheat, on the other grains, and this is the ETF, probably because of different levels of speculation in these sort of things. So and they're seasonal, so the true hedging gets done at different times. Not a bit more like natural gas rather than constantly on something like oil. So if we go to oil, here we go on oil. So oil daily, look at that. Remember we talked about that 50, guys, and the 38 confident. Boom. It's not magic. It's just numbers, and people are very, very bloody predictable, particularly in greed and fear. And that's what's going on with this sort of stuff, right? So it's a numbers game. So pretty clinical. That's crazy how accurate that is on oil, huh? And here we are on the weekly on oil. We spat that cage. Remember we said it had to get back over 96.20 to close the week. Well, we still got another day, but you can see it's made a pretty damn good effort. So now, and a real bullish situation would be if it got over this tanking on a close. I think we covered all those there, right? So let's talk about what we did after market here. Let me just drag it across. Really, the only earnings play was Fedex today. So where did I put that? I got to find where I put that. I had them all ready to go. What would you know? Oh, here we go. Sorry about that. So let's look at Fedex. If you want to, so I did a little bit on this, but Madhav, if you want to work us through that one, here's Fedex. That's a.
FedEx came out, and traditionally, FedEx, if you haven't noticed, has been going through not good earnings. It's been not performing where it is. The company has been underperforming the shipments and everything. So I figured this time FedEx was going to go down. But the only hesitation I had is this stock last earnings was up to about 150, 160, and maybe 170. So the stock has been down a lot. So I wasn't sure how much more they were going to sell. And when the earnings came out, disappointed, I hesitated. Underperforming. And when I hesitated, I missed the getting in short at the 130, 131s, and I got a bad fill at about 120, 80, I believe. Then I did another. That I did for 800. Then I did another 200 shares at like 123. So it basically bounced up from there, and it was a bad fill, and I hesitated, and I should have not done that trade when I missed the 130s. So I got stopped out at 225.90, and I swung around, went long, and it got up to 232, 233, and I was seeing if it would go higher. And when it broke back down, I got out at 229.
That's that bit here.
80. Yeah. I think I got out there, and then I reshorted again when the market started getting weak and stuff. I think it was 227.50, somewhere around there, and I just been riding out ever since. And I have like a little bit of shares left right now. I'm trying to just get out of, it's down to 222.65 now. So see how low it'll go, and I'll get out of my last of my shares. Made back up for my
right
loot.
now. Yeah.
I'm lucky. And so I had to work a little bit harder than I should have, but I could have done the first trade and made the 10 points and called it a day.
Yep. Yeah, that was amazing. It just dropped like 30 seconds later. Because we did a similar one. Okay, let's, not much else. We'll talk about Mullen real quick. That's one we mentioned we play around in, have a bit of fun in, for want of a better word. But it trades very nicely, and I think we shared what we were doing with that yesterday. So remember, we kind of market make it to a degree. We'll trade it like that. So yesterday when we shared it with you, we were trading about 180, I think, and we were trading at between 160 and 180 overnight. And remember, this is a big secondary play. That's why we're sharing it. So they did the secondary, and they're trying to basically get the highest level. The market's very short. Then it caught a bit of a bid because it is an EV And so we were able to trade this again. See, this is a very deep market, but look what it's doing from a Murray Math point of view. It does it in grids. They're all twos. See that? And it trades it perfectly. So we'll be interested to see what that is. I have no position in this at the moment overnight. Tend to just day trade this with this going on because you do know. Well, that's an interesting one, isn't it, Madavi? You got the guys selling the secondary, and then the market's short. And it all depends if we continue with this bull mania. Because what's interesting was the end of the world on Monday, and now, we're going back to all-time highs again on the stock market. So
I've noticed about secondaries, every time it comes out, right, these stocks always drop to really low levels. And people that think that it is the most reason is because the secondaries got an issue that everybody's selling. That's one. And the second thing is the person who's buying that stock, because the stock traded down that low, can get the lowest level of the stock positioning so when he gets to secondary. So there's two ways why that happens. And what he does from there is they usually bring back up the stock to a normal level to them and before they start selling it.
yeah, because they want to. At the end of the day, they want to make money. That's why they did it. It's an investment to them. Yeah.
Absolutely.
So they have a choice between holding that stock or taking profit on it or partially taking profit on it. So all those avenues are there. But generally, they've done a lot of due diligence when they've been talked into it or invested into it. So those factors need to come to play.
They're pretty good at it.
Yeah. It's not their first roundabout. So we looked at bonds real quick. Do we need to look at them again? We'll just look at the 10-year. We looked at the...
Well, how about our ORPH?
Yeah. Oh, well, Mullen we just went through.
The earnings?
Sorry?
Pike, P-I-K?
Oh, yeah. Yeah, pick was a little one. That was we had a little kid pick, which our friend Alan, I think, is the major shareholder in. Exactly. Some people call him the mayor of OCGN, if you know that stock. So here we have it. This is pick one, and these are momentum plays. But look if you just simple pattern analysis. We've walked you through before about volume, Murray Math, all that sort of stuff. You can see that. The next aspect's patterns. So price compression. You can see this little pennant. Builds it, then finally breaks. This went 350 to over 6. And you can see another pennant falling there. So just keeping it that simple, you buy the break or sell the break, right? So that's pick, and you can see it's done it in 3 ways. I think Johnny picked this one out this morning. No pun intended, actually, with the pick. So that's a good one. What else? Oh, there's one that people are talking about. ORPH, which many of you may know about. It was like, I think 100, well, how high was it? Hundreds of dollars a stock, right? So anyway, yeah, so, but what we did notice is volumes picking up. It's a Danish company. It's an ADR. It's basically in a delisting period. I think it's a voluntary delisting. So that's another one that's piqued up our interest. It's a small stock. It's an 86-cent stock. But if you remember that HYMC, the mining company, and Mullen even, they came up through the same analysis and same rules we have. So we'll see if this develops. And there was one more, wasn't there?
Yeah, there was your Mullen.
Yeah, no, we did Mullen. Mullen's down here.
And there was there was one more. Hold on, let me look at it over here. There was, which one was it? IMPP.
IMPP. No, that's one that we traded a few weeks ago.
There was another one, I think. Let me just look over here. Let me look through. Our you see, no, not that one. Let me see here.
Let's go through. Devon was one that we did in a call spread yesterday or 2 days ago. And so remember, this is one that's kind of the core of energy. These are
And the JD stock I did today too. That was great too.
yeah. Let's go through. And so here's Devon. This has been my real money earner the last 2 days. Look at this one. So that was up monster today again. So this is a big natural gas and oil energy play. And so that's one of the favorites. That was actually the top stock in the S&P last year. And so it's obviously got a lot of people following it. But you can see how this moves. And you can see, again, very simple analysis with Murray and Ichimoku and patterns, right? And you can see just see how it moves. Very clinical. And so you have a choice of buying these or doing it through optionality. These are good, given the nature of oil, how volatile it is. It's a good one to do spreads on, where you can take off the selling aspect and things like that. And what was the other one, mate?
What do you call it? The DJ.
Oh, yeah, JD. Yeah. Sorry. I didn't do that one today, but you did. So we played this yesterday, the Chinese play, and today we mused that more than likely they're going to come off because it was a mass overshoot. It was just a very compressed short market, and a lot of these Chinese stocks are very, very popular with the punter. And so here we are. That opened at 65 and change. And sold off.
If you look at it, sold off in the morning, in the afternoon, it came back and went higher.
Yeah. So it was 65 down to 58, back to 61. I didn't play any of that. So I was pretty much oil, and it's natural gas day. Yeah, it was a good one. So I think that's about it. So tomorrow the big thing. And so watch your options, watch your IOs and all that. It's quadruple witching, which means stocks, futures, indexes, futures on stocks, and all this sort of stuff, right? All expire, sometimes at dead ends, but this, because of the nature of the beast, of a big sell-off, there's massive amounts of puts were bought, and because of the nature of people still not used to bear markets, or it's still very much by the bit, there's been tons of calls bought. So calls bought, meaning there's lots of gamma interest, in other words, optionality spent both sides. So what you want to do is look at where things are most likely to ping. You go to OI on your bigger stocks, on your futures levels. Just look at open interest. And that gives you, a lot of this becomes like a magnet. And the old thing, you go to where the pain is the greatest, right? So we had, just simple in simple bloody terms, the market wiped out the longs, right? Forced them out at the start of the week, and it squeezed out the shorts in the rest of the week. Those that don't trade, right? A lot of people just have bias one way, they're scared or whatever, right? So, so what is that? That's pretty well it. I haven't looked at earnings, but I can't imagine there's too many. As I say that, there's probably someone we really watch, right? But so tomorrow, what do we got out in economics? Let's have a look.
I don't know. It's another week, another day. Oh man.
Yeah. So tomorrow. Oh, we got existing home sales. So today, just very quickly, we had the Bank of England raised rates, Taiwan raised rates, yesterday America raised rates, Brazil raised rates with a full percent, and so it's all to do with inflation. Worries about inflation, even though it's from effects that the banker can't really control other than send you broke. As far as job economic numbers for the United States, we had housing starts with a strong number, 6.8% up month on month. Jobless claims came down, and this is why the market rallied. It was all strong numbers, and industrial production rose 0.5, and the Philly Fed increased to 27.4. That was the big one, up from a consensus of 14. I look at consensus more as an analyst just have no idea, right? So just keep that in mind. So the rationale. Sorry, mate.
Remember who the cause of the inflation is.
Right. So you've got all that, the money printing. You've got commodities, price, the cycle, not cycle. What are we talking about? Supply side. So the argument now is they've accepted. We're going to survive all this. If you remember what Powell said, he said that. Remember, it sold off initially with the rate rise. So now the argument is, before it was, if the numbers are too strong, they're going to raise more. Now it's, if the numbers are strong, then the economy's strong, and they're going to raise, what's the word? Without being rash anyway. With thought and due process. So that's what's going on, and you can see in the background, there hasn't been so much talk about China's COVID, the war in the Ukraine. It's back into good old greedy, and I don't mean good in a good way, of self-absorption, right? Sorry, man.
They were on track. He said yesterday, we were on track for everything going smoothly until the Ukraine war.
Oh, yeah, definitely that's the latest. That's the culprit, yeah. Yeah, despite that we already had $96 oil and all the other things, food and everything going up. But hey, details. What's that saying? So have a good evening, everyone. Big day on oil, back up there at 103. And remember, it's also a lot of things. It's also futures expiration, things like that, in a lot of commodities like oil. We've got the quad riching and just that housing number. There is the Bank of Japan meeting tonight as well. So you tend to get all these central banks come together at once. So all that good stuff. So let's leave you with that oil to go out with, so you know where we are. So
remember, politicians can do no wrong. And subscribe and hit the like button.
Yeah, exactly. Hit that like, subscribe. What else? Tell good stories and have a Guinness or two tonight.
Happy St. Patty's.
Exactly. See you guys.